Hello and welcome to the day ahead. It's Thursday, April 17. I'm your host, Juliette Sarli. The local market is set to open lower, SPI futures down by 1/3%, and that comes after US stocks closed sharply lower during Wednesday's trade after Nvidia warned of major charges from new restrictions on chip exports to China, and Federal Reserve Chair Jerome Powell signalled slowing economic growth. The Dow was off by 1.75%, the S&P 500 dropping more than 2%, the Nasdaq sank by 3%, and the Russell 2000 of small caps was down by 1%. Meanwhile, Wall Street's fear gauge, the CBOE Volatility Index, rose sharply. Nvidia says it expects $5.5 billion in charges after the US limited exports of its H2O AI chip to China, a major market. Nvidia slid by almost 7%, and the broader semiconductor index dropped by more than 4%. AMD shares also fell sharply after the Dutch chip equipment maker ASML added to the gloom, warning that tariffs had clouded its outlook. United Airlines maintained its profit outlook for 2025, but unusually laid out two scenarios for the year, saying that the macro environment was, quote, impossible to predict this year with any degree of confidence. US Fed Chair Jay Powell has said the central bank will wait for more economic data before adjusting interest rate policy. Speaking at the Economic Club of Chicago, Powell said that the economy and labour market remain solid, while a rush of imports to beat tariffs may slow first quarter GDP. But Powell also warned tariffs could drive up prices while slowing growth and weakening the labour market, pushing inflation and employment further from the Fed's goals. Despite the challenges, Powell said markets were functioning well and that recent volatility reflects investors adapting to the shifting policy environment. Meanwhile, the World Trade Organization has sharply cut its 2025 trade growth forecast and warned of a deeper slump due to the US tariffs and spillover effects. The WTO citing they could lead to the heaviest slump since the height of the COVID-19 pandemic. The WTO expects trade in goods to fall by 0.2% this year, down from its previous expectation of 3% expansion that it made in October. US retail sales saw their biggest jump in over 2 years in March as households rushed to buy cars and other goods ahead of expected tariff-driven price hikes, likely just enough to keep the economy above water in the first quarter. Retail sales were up 1.4% in March, the largest gain since January 2023. Manufacturing output rose by 0.3% in March after rebounding by 1% in February and grew at a 5.1% rate in the first quarter. Meanwhile, the Bank of Canada held its policy rate steady at 2.75%, citing the need for more time to evaluate the impact of tariffs. The yield on the US 10-year Treasury note declined 5 basis points to 4.28%. The US dollar index, which tracks the currency against 6 of its major peers, slid by 0.75% to around its lowest level since April 2022. The Aussie dollar is buying 63.7 US cents, and Bitcoin a little higher above 84,300 US dollars a coin. Gold prices surged past 3,300 US dollars an ounce to hit record highs as investors turn to safe havens amid the escalating US-China trade tensions. Gold has now posted 25 all-time highs this year, of which 13 are above the $3,000 level. Oil prices rose nearly 2% to a 2-week high on concerns about global supplies after Washington issued new sanctions targeting Chinese importers of Iranian oil. Brent crude futures settled almost 2% higher to $65.85. West Texas Intermediate was up by 2% to $62.47 a barrel. Well, the key focus locally for investors today is the March labour data, with estimates that 45,000 jobs may have been created last month. It is a key indicator ahead of next month's RBA decision. A number of companies also report quarterly earnings, including AMP, BHP, South32 and Santos. And that does it for the day ahead. I'm Juliette Sarli. We'll see you next week.